Hey folks, Todd Martin here, your local Louisville real estate broker with Realty. Uh, Still working, still moving. According to the governor, we are essential to the economy, so we're here to help. I want to let you know things are still in full swing here. We're not on a lockdown, so no mandatory lockdown. We are still helping people buy and sell homes. Now, what I want to talk to you a little bit about is I've got a lot of questions lately with regards to COVID-19, and how that is affecting the market, and if we are seeing the similar signs that we saw in 2008. I'm here to tell you this ain't 2008, okay? A little bit of play on words, but similarly, I know a lot of people are scared, a lot of people are freaked out. There's a lot of things going on. We've got restaurants shut down, non-essential retail shut down. I don't think I've had this much hair in a long time. I can't even get a haircut. So we're starting to see a lot of buzz cuts come to the market for the market. And it was just announced that really things are going to be on lockdown all the way through the end of April. And I get it and I understand. What I found is I found an article that kind of breaks down, again, why this ain't 2008 with regards to the housing crisis. And yes, the housing drives the market, but this crisis is not driving the housing market. So what I want to do is I'd like to break that down and explain to you and show you how it is. And this link will be below, so you can definitely see this article and kind of get an idea of where we're heading. Okay, so we don't have widespread fear amongst the market, because again, real estate is more about life. People have to buy and sell to move on with family and jobs. Okay, so here's what I want to show you. Okay, so here we go, right? So the first thing is mortgage standards are nothing like they were back then. One of the things that you got to understand is that, although back then you could do what's called a non-qualification loan. Basically, you'd walk into a bank and say, hey, I make X amount of dollars, and they're like, great, here you go. Today, it's a lot tougher, right? So we saw the bubble busting up here. Today, the rates are down just a little bit below. Prices, they're not soaring out of control. So if we look at the annual home price appreciation, 6 years that led up to the housing crash starting in 2000, prices were going from 8% to 12% to 8.5%. Today, they're maintaining roughly 3 to 4% in the good markets, okay? Now, we don't have a surplus of homes on the market. We actually have a shortage. So it's turned into more of a seller's market than it has a buyer's market when we look at the inventory of homes, okay? And these are months worth of inventory that we have available, meaning that if nothing else came to the market, that's exactly how long it would take to sell the homes. So you can see that, again, the home market is still consistent with the amount of homes that are on the market. The percentage of the median income needed to purchase a home, basically what that meant is you'd have to have 25% of your income for the purchase of a home, where today it's down to 15%, enabling you to get into a nicer home without making as much money as you did back then, or had to make back then, with regards to wages earned and the price of the house. Now, again, people are equity rich. They're not tapped out, meaning that, what we've got is we've got people that still, if we look at the amount of total equity cashed out, okay, where people were taking money out of their homes, pulling money out of their homes, you can see the big change in the numbers here with regards to that. So in other words, people aren't extended over the amounts which they were back in the crisis of 2008. And again, the bottom line is, honestly, if you're concerned about making the same mistakes in the housing crash, this is completely different, okay? You've got to understand that there are more safeguards in place now because of 2008. Prior to that, again, it was just a huge spending spree, and now people are really coming down the pike, and they're being very, very specific and very, very detailed on what they can purchase, how much they can purchase with regards to home ownership and budgeting. Budgeting's been a big thing that I've been going over with a lot of clients here lately as well. So again, take a look at the article. If you have any questions, please let me know. We're here to help. And as always, Feel free to shoot me a question. Feel free to give me a phone call. If there's any way I can be a help during this crazy crisis, please feel free to reach out and know that we're here to help. We also want to let you know that we're taking every safety precaution when we are out showing homes with additional washing materials, gloves, booties, anything to make our clients feel safe, as well as, if you do know of anybody that's interested in purchasing or selling of real estate, please reach out to us. We'll make it safe. We'll do virtual tours. We'll do whatever we can to help. So again, we look forward to connecting. We hope you have a great day and stay safe out there. Thanks so much. Talk with you soon. Bye-bye.